So hi guys, a very good morning to all of you. This is Rahul Prajapati and welcome to another exciting webinar. So what we are going to talk about today is option chain, right? Okay. So most loved and most liked topic, mostly by the option traders specifically. And from the context perspective, it is very required from any option trader to learn the option chain, right? And the reason being is why it is very important, because there are a lot of data points that we can get from specifically from the option chain. So it's very important to read and understand this option chain from every trader perspective, right? So it's even if you are very new, you're very probably experienced, and probably every option trader looks at option chain at once, right? Okay. So what is the option chain and what are the key points, what are the data that we need to see? We'll talk about that. सबसे पहले I'll show you the NSE option chain, and I'll talk about how that works, and then I'll show you what are the difference between that option chain and what you're going to get in Quantsapp option chain specifically, right? Okay, so we'll go to NSE India. Okay, and then let's say Nifty. So we'll go and click on this. Okay, now we'll click on the option chain. Okay, so here it is. Now, what is the current price of Nifty? The last day closing price is 17,516. Okay, that's the underlying price. Okay. So if you see 17,516 is somewhere between here, right? So this is probably this is this one, right? Okay, so this is your at the money option, right? Okay, so generally I'll talk about what is at the money also. So what are the key points that we need to look for? So this is the strike price. Okay, so this is what the strike price is, and we have like bid quantity, bid price, ask quantity. So this is the basically a kind of order book you're also getting it simultaneously. Okay. And then we have like the price. So LTP is a price, that means option premium, right? So that is the one thing. Simultaneously here also we are having the LTP for put option also. So we have both. Then we have volume, and then we have option chain. Open interest and change in the open interest simultaneously. So basically, on the right side, if you see, you will get put option specifically. On the left side, you will get the call side. Okay, call option data specifically. Now, what else we can see here is that, okay, so whenever you see this particular change in open interest and open interest, so here they have mentioned in the lots specifically. Okay, so these are the lots that has been traded. Earlier, when the NSE used to publish this, they used to show the quantity here. Okay, now if you go down and you will see, so you'll see the open and volume and open interest are mentioned in the displays in the contracts, right? Okay, plus highlighted options are in the money. So basically we'll talk about what is in the money. So these are the two in the money for both call and put, right? Okay, and one more thing, the 10% rate is applied while calculating the implied volatility. So this IV they are calculating, they are putting a 10% fixed interest rate on that, right? So that's why we're getting this implied volatility. Fine. So there could be this is a questionable thing that we should be using fixed interest rate for calculating this. 10% is quite huge as of now. So but still they are still using that thing, right? Okay, so these are the things that you can see here. Okay, so logically what we need to study is the thing is that these points, these are the important few points, like change, LTP, IV, volume, and change in open interest and open interest. So these are the only, this area will probably not study. This is not required. Okay, fine. Now let's come to the R option chain. Okay, now let's come to Nifty. Okay. So first of all, if we see here, so what we are looking at, Nifty 10th February. Okay, and this is the price, this is the fair price. Okay, now, so again we also have the same thing, like these strikes here. So these are all the strikes we have. Okay. Then we have here like prices. So premium. Okay. So call option and put option. So we have removed that bid and ask, that thing, right? Okay. Then we have IV. So IV is implied volatility. Okay. So implied volatility is there. So they will find a bit difference between the NSE website IV and this IV. There's a small difference just because of that interest rate. Okay. Not any major difference, right? Then we have a volume. Okay. And lastly, we have open interest and the change in open interest in the same column. Okay. So we don't require a separate column for these two. So if you understand this thing, you know this thing. What is this? Fine. So these are the few data points that we need to look for. So individually, we're going to study everyone and we'll see what are the important things that we need to see. So first of all, if we see this open interest, we know that there are different type of strike prices that we need to see. So these are, all we have in this. Okay. After that, इसमें क्या कर सकते हैं हम लोग? We can go and check the moneyness of the option. Okay. So moneyness के बारे में बात करें. So it's as simple as that to understand this. कि when we're talking from the call perspective, okay, the levels that the stock has. So whenever we buy a call option, let's say, so simplify this thing. Whenever we buy a call option, we anticipate that market to move up, right? So that means so if we see this thing, right now market is at this price. So we assume in this case that market has touched these levels and market has reached this point. So these are the lowest levels like 17,300, 17,400, 500, and market is trading at this level. So that means market has already achieved this level and standing at this point. Now it wanted to go further up. So those levels which market has already achieved while going up, these all are in the money options. Logically, this is a very simple way to understand, but there is a specific formula that you need to learn so that you can do it, right? So that is the thing. Okay. And the levels market need to achieve right now while going up. So that are the out of the money options. Same with the put options. So whenever we trade options, put options, so we assume that market is likely to go down. So the levels market has achieved already. These are in the money options. If market, whatever the levels market need to achieve on the downside, so these are the out of the money options. That simple way. But generally, if we go from the mathematic point of view, so we need to use this formula. Okay. I'm just writing it. Okay. So max of spot minus strike or zero. That means if we take this thing this is for call option, okay, specifically call option. So if we take this strike price, let's say this one, 17,550. Okay. And current price is, let's say 17,500. So when we do the spot minus strike, this formula will give me zero. Spot is below the strike price. That means it will, so we don't have to take the negative value. We have to take the zero. Okay. So that means even though if it is giving a negative value for us, so we need to select the maximum out of it. So if let's say if it is giving me minus 50 and here I have a zero. So maximum is zero. What is the max value? Zero. So I have to take. So whenever this formula is giving me a zero as a, in this value, so probably that is a out of the money option. Whenever this formula generates a positive cash flow, that means positive value. So that option will become in the money, right? As simple as that. Okay. And for put, it's totally around strike minus spot. Okay. So that is a different way. So just by looking at the colors also we can identify. So this bit light color is all the in the money options. Okay. This is also in the money options. Okay. And these dark colors that market need to achieve, these are the out of the money options for call and put, right? So as simple as that, that is the first thing that we need to understand. So we understood the moneyness concept. Okay. We understood the premium. So premium is basically, so if we talk about again this thing, so premium is basically of okay. So your premium is basically intrinsic value and type. Okay. So that intrinsic value is again calculated by the same formula. So whichever the strike price has intrinsic value, like market, the levels market has achieved. So these level market has achieved, right? So all these option has some intrinsic value, all these options. And in the put option, these values have some intrinsic value. Okay. So the strike price which has an intrinsic value, or all are in the money options. Okay, and the market that need to achieve these are having only time value. So if they have a time value, that means they are out of the money options, because they are working on hope that market will reach that level. If market is not able to reach, the time value decreases to 0. That is the concept behind it, right? So this become these out of the money options will become 0. So there are a lot of people say almost, if you say 50% of the options always expire in the money, out of the money. And if you talk about this seems to be sometimes a vague vague statement. I used to think this is a vague statement. How can all 50% of the options expire out of the money? The question is always was there in my mind, but I tried to investigate that thing. I got to know that it's very simple thing, but I never tried it actually. So let's say we have all these strike price. So we are sitting at the center of the whole option chain. Okay. Now, if we say market closes at this point, exactly 17,500. So these all options of call options will become out of the money. So these they will become 0, and they will expire worthless. So these two will expire worthless. These are the only options which have. So if we have 20 strike price on the call, 20 strike price on the put. So if 10 of calls and 10 of strike price of put are expiring, 5 of call and 5 of put are expiring out of the money. So that means 50% is already expiring money out of the money. But the quantum of the options getting expired out of the money is always higher. Quantum means the quantity that we are trading, because there are more of the option traders trading the out of the money options, not in the money. It's always a numerical, if you talk about the theoretical perspective, that okay, 50% of the strike prices will go out of the money every time. You consider any strike price. If let's say if we go to the highest strike price, let's say if market closes at this price, that means all the call are in the money, but all the put will become out of the money. So at any price, if market goes, this half of the option chain has to close in out of the money, right? So that's the statement, right? But people trade out of the money more, or options more. So that means the quantum of the options that expiring out of the money is higher, always higher. Okay, so that's one another point that probably you would have understood. Yahan tak clear hai? I think this is very simple. Now the next question arises is we talk about the open interest and the volume. Okay, so volume is not that much important in this thing, but still, and the important part is open interest. The next thing is that like if you say open interest, so how this thing, so these are the contracts or quantities that has been traded on each strike prices. Fine. Generally, when we talk about the open interest in this option chain, so what is the use of this? We are able to decide the support and resistance. Okay, so we are reading the option chain from the perspective of option seller specifically. ऑप्शन सेलर के पर्सपेक्टिव से इसको देखा जाता है. इसका क्या मतलब है कि अगर आप फॉर एग्जांपल अगर मैं इसको सिंपलीफाई करके बताऊं, तो लेट्स से अगर मैं 17,600 का कॉल ऑप्शन बाय करता हूं, इफ आई बाय दिस ऑप्शन, व्हाट इज द मैक्सिमम अमाउंट आई कैन लूज इज 108.2. दैट इज द प्रीमियम आई हैव पेड एंड दिस इज द अमाउंट दैट आई कैन लूज. वन थिंग. सेकंड थिंग इज अगर इस चीज को कोई ऑप्शन सेलर सेल करेगा तो ही हैज द मैक्सिमम प्रॉफिट ऑफ 108, बट ही इज सिटिंग एट अनडिफाइंड रिस्क. He know that this could be a very risky game for him, but still he's playing this strategy. He's selling this option, and there are a lot of people who are selling this, right? So why we are studying it from the perspective of option sellers? That means even at sitting at this higher risk, he's still ready to sell this option. Even if it is selling that option, why he's selling this option? Because उसके पास कुछ ना कुछ ऐसा नॉलेज जरूर होगा जो हमको नहीं पता. इतना रिस्क वो तभी लेगा जब उसके पास हमसे कुछ ज्यादा नॉलेज हो मार्केट को लेकर के. दैट मींस उसका एंटिसिपेशन ही यही है कि मार्केट 17,600 नहीं ब्रेक करेगा. एंड इवन दैट गाय इज नॉट ऑलवेज राइट. ही कैन बी रॉन्ग, राइट? इन दैट केस ही कैन बी रॉन्ग. ओके, so logically we are saying that whenever we read the option chain, we read it from the perspective of option sellers. Now what do we need to read in the option open interest specifically, we need to find the highest, the value of the strike price, where we can see the highest open interest. So if you see, there is a highest open interest in 17,800 call option. That is again out of the money. If we see on the downside, so probably we are having the 17,500 where we have the highest put option. That means if we say, so whenever someone sells a call option, his anticipation is market will not breach that level. If someone is selling some put, that means he is anticipating that market will not breach that level and go further down. So now you see the current price is 17,524 and market, the highest put option is at 17,500. That means market is actually sitting somewhere around the support, right? So 17,500 will be working as a support for a market. On the upper side, 17,800 is the resistance for the Nifty, right? For this expiry. Now, if this particular column seems to be difficult to read, so what we can do is we can go to the open interest and we can read this thing. Okay. Now, if you see this thing, just by looking at this graph, we can identify the highest highest green one is at the 17,800. So that means that is a resistance, and highest red bar, very immediate, is 17,500. So just by looking at this, I can identify that these two levels are my support and resistance, and market is trading at this price in between these two levels. Now, how to read it further if we want to see? So if we go and this in this particular strike price, तो यहाँ पर अगर आप देखोगे तो okay, 17,800 call option has 57 lakh 62,700 is a total quantity that has been traded on this. And if you see in the bracket, there is a 28 lakh quantity has been added. So 57 में से अगर हम 28 निकाल दें, so we will get whatever the amount is was this. ये जो dark आप light color में देख रहे हो, that was the amount that you can see. इतना एक दिन पहले built up था, और ये जो extra add हुआ है, that is the addition yesterday. By adding, we get 57 lakhs. So that means that we call it addition, call addition. Okay. So whenever you see some hollow thing here, okay. So that means whenever you see hollow, that shows a put unwinding or call unwinding, wherever, irrespective of wherever you are seeing it. So if you see on 18,000, the hollow bar on the upside, so that is unwinding, right? And if we see this on this particular 17,700, if you see, so that you can see that 5,80,000 is the total open interest, and almost 4 lakh open interest has been decreased in the last trading session. That means यहाँ पर position किसी ने square off किया, जो open interest कम हुआ है, right? Option sellers might have moved out of the market. तो अगर मैं 4 लाख में इसमें add कर दूं, तो it was 10 lakh yesterday, probably one day before. Okay. So this is how we can read. So change in the open interest and open interest is to be read like this. Fine. Okay. And one more thing, if you don't want to see this, you can go to the triggers and you can find that where we have the highest call and highest put option for any particular stock. Okay. Generally, why we look at this thing? The reason being is that we know if any stock is trading near the highest call and highest put option, that means these are the support resistance. As soon as market break that level, we can see a breakout coming up in the options, right? So यहाँ पर हम देखते हैं. So what is this? So triggers is a tool which basically helps you to find all the stocks. Okay. So all the F&O stocks, you can scan those stocks which are trading near to the highest call option or put option. Now, if you see this, so first is Aarti Industries. Let's say we'll take this example. So if you see Aarti Industries trading right now is the current price is somewhere around 1,000 rupees. Now, where is my highest call option? That is strike 1,100. So that means that green bar is at 1,100 and put for put is at 900, right? 900 पे इसका highest put है और highest call option कितने पर है? 1100 पे. Now अगर हम देखें तो 9% का difference है दोनों में. They are now the current price and the strike price has a difference of 9%. So it's very far. तो breakout के लिए भी wait करना पड़ेगा. And this is also like 10% approximately. So यहाँ पे भी आपको breakout के लिए wait करना पड़ेगा. Okay. So we can even identify the stocks which are trading near to the highest call option. Okay. So how do we do it? we can just click on the call difference and we can see these are the stocks. So green colors are mostly show you within the 2% range. Okay. So if you see Steel Authority, if you see the Steel Authority, that means here, if you can see what you are able to identify, the current price is 105. The strike price highest is also 105. That means it is trading near to the highest call option. And put option is on the lower side, 4% niche hai. That means as soon as the stock will start moving above 105, that means you are going to have a breakout. So यहाँ से stock पे move आएगा. And you see open interest is not that much change, very small. Even if you see the GSPL, so that the current price is at 319, highest is 320, and open interest is already started decreasing by 3%. So that means there is a breakout likely to be expected in this particular stock. So go to GSPL open interest. Now you see, if you see the highest call option is at 320, okay. And if you see the unwinding is already started, that means as soon as the stock will start moving up, we'll have a first resistance at 325 and 330. After that, we are clearly open. After that, the stock will move up very drastically. Can move to 340 very easily. Okay, or we need to see the situation after that, how that built up, right? Okay, so that is the thing. So now these are the option open interest, you can read it. Now the last and important point of the option chain is probably my favorite, but I like is this IV, right? This implied volatility. Okay, so there are a lot of things specifically. So when we talk about the implied volatility, symbol is there are two types of volatility. First, now let's understand what is volatility. So it's just the movement. So if we see India VIX, so India VIX is like, let's say it's trading at, let's say 20. So what does that mean? Logically, if we go by the theoretical definition, we say that in a 1 year, what is likely to happen in the market? It is likely to be in a 1 year, it is an annualized percentage return. Okay, so that means market can move up by 20% or down by 20% in 1 year, in next 1 year, right? But that is not, because that volatility is not static. It also keeps on changing. So that is the view. Now that is the historical volatility we are talking about. That means market has shown the volatility of this much till now. Okay. Now, what could be the next thing that could happen? So there are, so historical, so whenever we talk about implied volatility, it's just based on the historical volatility also. मतलब वो historical volatility पे ही based है. Basically वो reference उसी का ही आता है उसमें कि okay, this was the historical volatility. Okay, the market has behaved like 15% on 15% volatility over the period of time. But due to say XYZ reason, the implied volatility, the volatility that we are expecting likely to be, right? Okay, जो होने वाला है, वो volatility 20 से 25 होगी. तो historical से plus minus is the implied volatility. अगर कुछ event आने वाला है तो historical plus premium, risk premium is a implied volatility. कुछ भी हो सकता है, वो कितना भी परसेंट, वो तो मार्केट प्राइस करता है उसको, बट दैट कुड बी प्लस माइनस द हिस्टोरिकल वोलेटिलिटी. अगर 20 था 26 हो गया, दैट मींस 6 प्लस परसेंटेज का जो एक्सेस वोलेटिलिटी बढ़ा हुआ, दैट इज अ इम्प्लाइड वोलेटिलिटी, जो होने वाला है किसी इवेंट की वजह से होने वाला है. ओके, और नहीं भी है तो कुछ ना कुछ तो वोलेटिलिटी रहेगा ही, राइट? इट्स नॉट ऑलवेज हिस्टोरिकल एंड आईवी आर इक्वल. ओके, नाउ क्वेश्चन अराइजेस, ये इसका क्या इफेक्ट होता है? So अगर हम इसकी बात करें तो basically we can see that we have all the option Greeks here. Okay, अगर आप देखोगे तो आपको डेल्टा भी मिल जाएगा. That means 17,500 call option has a delta of 0.5, theta is 12, gamma is this, and vega is this. Okay, and this is the thing. So there are a lot of things that is affecting the options prices, right? So वो क्या क्या होता है? Underlying price, then time, and then volatility. ये तीन चीजें जो होती हैं वो आपके ऑप्शन प्राइस को अफेक्ट करती हैं. फाइन. नाउ सबसे इंपॉर्टेंट जो होता है आपका, वो क्या होता है? वी डोंट नो, बिकॉज वी डोंट नो कि कौन से टाइम पे कौन सा ऑप्शन ग्रीक काम कर रहा है. ओके, वी डोंट नो कि कौन सा स्पेसिफिकली ऑप्शन ग्रीक का इंपॉर्टेंस किस टाइम पे ज्यादा हो रखा है. इफ देयर इज अ ह्यूज मूवमेंट इन अंडरलाइन, सो वहां पे डेल्टा काम करेगा. अगर मार्केट बिल्कुल ही रेंज बाउंड हो गया और टाइम बीतता जा रहा है तो थीटा काम करेगा. बट किसी इवेंट की वजह से वोलेटिलिटी जंप हो रहा है, दैट मींस वी हैव अ वेगा इशू, राइट? सो कौन सा है, किसका रिस्क है, अभी हमें नहीं पता. ओके, सो एवरीथिंग हैज अ इट्स ओन डेफिनेशन. सो डेल्टा बेसिकली क्या चीज है? डेल्टा आपको बताता है कि अगर आपके अंडरलाइन में XYZ पॉइंट्स का मूव आता है तो आपका ऑप्शन प्रीमियम कितने रेट से चेंज होगा, एज सिंपल एज दैट। थीटा आपको ये बताता है कि अगर आपका ऑप्शन प्रीमियम हम एक दिन तक कैरी करते हैं तो कितना वैल्यू लूज करेगा, बिकॉज टाइम के साथ ऑप्शन प्रीमियम डिक्रीज होता है। वेगा आपको ये बताता है कि 1% वोलेटिलिटी चेंज होगा तो आपका ऑप्शन प्रीमियम कितना चेंज। वोलेटिलिटी मतलब आपका आईवी कितने परसेंट से चेंज होगा, दैट मींस अगर मैं इसकी बात करूं 17,500 का, इसका इम्प्लाइड वोलेटिलिटी 16.54 है। अगर ये 17.54 हो गया तो ये जो ऑप्शन है दिस 160 रुपए का जो प्रीमियम है वो 8.49 से बढ़ जाएगा, राइट? कैसे? So it's just a last topic, we are going to finish it. So if we like put 16.54, that was a volatility, okay, and we calculate it. So this is the premium, okay. Now what he's saying, now see, if you see the Vega is 8.1415. Vega is positive for both call and put. That means whenever volatility will increase, what will happen? The call and put price both increases by same amount. That means approximately 8.15, 8.15. Okay. Now see, I'll write it here. The premium is 147.77, and for put option 123.42. Okay, so these are the premium. Now I will change this volatility by 1%. Okay, that means I'll change it to like 17.54. And 8.11 was the, we had the 8.15 was a Vega. Now you see, I have changed this, so this increases by 8 rupees approximately. This value was this, and this increases by approximately 8 rupees. This is also same. So that signifies that whenever volatility changes by 1%, your option premium will increase by Vega amount. Okay, so that's why we need to see that, and see both have increases, and other things being all constant. These all are constant. We are just reading the volatility. If volatility increases, that means this goes up. Now if you see that this goes drastically by like, let's say for 50%, so that means see that 140 rupees premium will become 400 rupees automatically. I hope that you understand, right? So these are the few points that we need to learn in this. So the most important part is this Vega volatility you need to understand. Plus open interest is one of the another point in the option chain. So let me just conclude what we have learned. So option chain is a very important part for any trader that he needs to learn. So what are the different components that we need to see? We need to see that option price, option strike price we will get, option price we will get, then we'll get the IV, change in the open interest and open interest. The most important part is open interest and change in open interest. Then you read it and you understand where is the support and resistance of the market. Okay. You can even go to the chart of the option chain and read it, that what is the highest call option, highest put option, where is the resistance and support of the market. Then we go and check even the triggers where we can easily scan where we have the highest call option and highest put of the stock for any stock, right? For F&O, and there you will get the breakout levels specifically. And the last point is we talked about is that we have a volatility part, Vega part. Okay, so that means if there's a 1% change in IV, how much my option premium is likely to change. Plus you can see all the option Greeks there, first order Greeks specifically, and gamma is the second order, so you can see that also. So these all are the thing that we can get out of the option chain. Okay, so that's simple. Okay, now I hope you like that thing and you understand what I wanted to tell you. Plus, before I finish it, okay, so let me go. Okay, so let's go to the learning part and we'll go to the option. So workshop. Okay, so workshop. So on 12th of February, I'm conducting options mania, kind of a small workshop for like 2 and 3 hours. So there will be like, I'll be going to talk about few option things like how to read specifically in detail the open interest and what are the trading setup that we can use, how to create a strategy, specific strategy. Use this if you have a specific view. view about the market, and one intraday strategy where we are going to talk about how to use the order book and all those data specifically. Plus we'll be using, so all the things will be used by, we are using the Quantsapp, and will help you to simplify all those things which we, a trader always wants specifically. So you can join this workshop if you are specifically in the Mumbai. Okay, so that's an in-person workshop, right? Probably for just like 2 or 3 hours, not more than that. Okay, so you can come to our office, you can join me there, and we can have a discussion on this, right? Okay, and plus if you want further information, you can, just put down your queries here and you can get it, right? Okay, and the people who are like, interested in learning options specifically, so you can see that we have option certification course, probably at a from basic to advanced the level specifically. So here you can learn all the things about the options, open interest in detail, and probably option Greeks in detail, and the how to customize your option strategies in a different way, and you can make money out of it. Okay, and then we'll be having different trading setups and few technical setups also. There we also have a few sessions by Shubham sir also, right? So that is how going to be, right? So we'll be starting like in March specifically. So there are 2 batches already running. One is like probably going to start by 21st of March specifically. So if you are interested, you can go and join that also, right? Okay, and probably we have one more workshop that is a bit advanced workshop, that is professional option trading. So that you can also join if you are already in the market and you want to learn only derivative options trading setups, okay, based on volatility, based on volatility breakout, and directional option strategies and all those things. Plus we have a one more specific setup which basically help you to repair your option strategies if you stuck somewhere, right? So these are the all things that you can get in the professional options trading also. You can go and check in that also. So you are going, you will see what are the trading setup that we are going to see, and we'll learn the option geeks there also in huge detail, right? Specifically. So these are the few things that you can get, and if you want to like go and see, so you can check. And and this workshop is also in our the specifically in our office in Mumbai. Okay, so it's in person, and option certification is basically a online kind of certification course, so you can join from anywhere, right? So that's all from this thing, guys. Okay, so thank you so much for joining this webinar. I'll hope you like it. So do share it with your friends and people who do the trade options. Okay, and thank you so much. I'll see you again in the next session. Bye and take care.